regarding rates, as loan officers, guys, you should make this a daily habit. The daily habit is looking at the 10-year bond, the Treasury 10-year bond yield, guys. Okay, so real quickly, if you don't do this, I do this religiously. I have it on my phone. I'm constantly Treasury 10-year yield. I'm looking at this religiously every day. Okay, the market yield. Okay, here. If you're not looking at this every day, you're doing a disservice to your clients. If I knew that you weren't, I wouldn't work with you as a loan officer, because that means you have no idea what rates are doing. Okay.
Well, you owe it to yourself. You got to protect your profit.
Yes, exactly. There you go. Better said. Okay. So, let's do a 5. I don't like this one, but whatever. So, right. What you're seeing here is what Ian's referring to is on Thursday and Friday, we saw massive sell-offs. Okay. So the bond dropped, but by mid of Friday, it started creeping up. And then, that this is after hours, or this is off market futures. And then on Monday, it just shot up. And then today we shot up again. That has nearly, basically it's a 99.999% correlation to what mortgage rates do. You guys understand the correlationship between the 10-year Treasury and the mortgage loans or mortgage rates, or no? Yes or no? Paul, Christine, welcome. Do you guys know what the correlation to the 10-year Treasury note and the mortgage rates are? Yes or no? No? Yeah? Okay. So you guys understand that mortgage rates then in of itself, like by itself, is not a security that can get traded on Wall Street, right? And so mortgage rates follow the 10-year Treasury bond because it's the closest thing, or that's what it's closest to a 30-year mortgage amortization. It's not obviously, Treasuries, there's 1 year, 3 year, 5 years. Those are too short term. It's long enough to follow a 30-year amortization, but short enough where, because loans are constantly being traded on the right, refinance out and sold and whatnot, it's short enough. So they use a 10-year, so they couple them together, okay? And they securitize it. That's what a mortgage-backed security is, MBS, right? Mortgage-backed securities are things that can be traded on Wall Street. You could literally invest in mortgage-backed securities. But mortgage rates or mortgage notes in of itself is not a security that can be traded. So that's why it follows it. That's why we look at the 10-year bond yield. Okay. But I want to show you this real quick though. When you're looking to answer a part of Ian's point, after you see a big dip, at most 2, my rule of thumb for the past 3 years, okay, for the past 3 years has been lock it. I never go more than 2 days. Okay. Usually, if there's a huge drop in the bond, I have my clients. I say my recommendation. I'm not telling you what to do, but my recommendation is to lock it. And the reason is this: when you look at one given month, and this I might have to find. Let's just use this. Look at these up and down jagged lines, right? At the end of the day, guys, okay, from this is a whole month, right? Your average rate or here in the price is about the same. You're not seeing a line that goes like this, right? Or this. It's right across. That's for 5 days. When you look at a month, it's about the same. When you look at 3 months, it is trending a little bit lower, okay, but not significantly low. If you look at a 6 month, okay, it's about the same. There's one straight line, the average cost right there. If you look at a year, that is a year. It has been downtrending though. But even if you look at a whole year, it's about the same. You guys understand that? Do you see do you guys understand what I'm saying? The rate hasn't been changing significantly the past few years. You'll get lucky, but really, because you're only looking at a 30-day escrow, there's no reason to try and wait it out. So I kind of disagree. Peter's not on, so I'm going to say it. I actually disagree with the advice of floating and waiting. Okay? Because like Ian said, if they have a reprice, it's already too late. Okay? It's just better for the peace of mind for everyone just to lock it after you see, again, a day or at most 2 days of price improvements. The likelihood of it shooting back up is really high right now because we are in a volatile market.
Right,
and that's my 2 cents on that.
Can I add something else, Ragnar, with respect to built-in repeat business with your client?
Yeah.
So I had quoted a client at 6.625, and rates started climbing. I was still able to lock in for a good pricing. So his ratios were low enough to where I convinced him to take a 7.125. The payment difference from a 6.625 rate to a 7.125 was $201. I said, in the back of my mind, I know this guy's going to want to refinance again when rates starts getting better. We have a scheduled 2 rate cuts before the end of the year. So I convinced him to take a higher rate. And with that, in exchange for that, I was going to waive all the fees. And it's still a healthy ROI for the company. And I said, I'm going to save you $7,600. And the difference is $200. And with the rates coming down in the coming months, I know we have to close now because this is a contract sale. We can't wait until rates come down in the next 2 months. So he agrees. He took a 7.125. He'll be paying $201 more, but I saved him $7,600 with the plan of refinancing him again by the end of the year. So that's a baked-in refinance for me.
Yeah.
So,
Definitely.
If you secure a 6.5, 6.6, more than likely you'll refinance if rates go, half a point, half a percent.
Ian,
Yeah.
I have a question. So when you say you're covering all fees, like no closing costs from the bar?
I just waived because on my LE I put 1 1/8 and an 895 admin fee. What I told him in the beginning was that's an initial loan estimate. It'll more likely get one of them, 1,000 or more, we get washed out, right? So, I assured him that's going to come down. Rates might even go down lower, but that's not a guarantee, of course. But then when it was time to lock for me yesterday, I said, listen, that initial loan estimate, it shows that I'm charging you $6,700 plus $895 admin. I said, I can make that go away. So that's a total savings of $7,600. Provided that we increase your rate to 7.125. I said, it's only going to be $200 more a month, but you make 6 payments and it'll only be about $1,200. So you're way ahead of the game. Because I do know, and I said, I'm not making promises, but the writing's on the wall, the tea leaves are already showing us that there's going to be 2 rate cuts before the end of the year. So with that said, you'll be better off not spending the extra $7,600 for a 6.625 or a 6.5. So he agreed, and I know he'll be calling me again when rates get better. So might as well take the higher rate, save money on closing costs, and I'll see him 6 months later.
Very good.
So I guess what I'm trying to say is, if you can sell the higher rate, and if you could tell them, listen, it's you can maybe give him a newspaper, like an article that there's going to be 2 pending rate cuts, and then of course, with the market volatility, we can't fully predict that now, but it's the economy is pointing towards a rate cut. I think we're heading towards a somewhat of a recession, if you will.
Yeah.
So 7.125. He's happy about it. That's all that matters. And I'll see him 6-7 months from now.
There you go. There you go.
I mean, if you can sell it, right? I mean,
Yeah.
every customer is
Of
different,
course.
right?
Yeah. Yeah, I mean, we could definitely have another, based on what Christine asked too. I mean, we could definitely have another session talking about how you guys are selling rates, how to maximize, right? Because at the end of the day, we as loan officers, we're here to help our clients, yes, of course, finance their home, get a good rate, but we're also in the business of profitability for ourselves, right? I'm not gonna dismiss that at all. Right now I am lowering a client's, rate from an 8.75 to a 6.875. But guess what? I'm making 2.5 points on it on the back end. So could I sell them a lower rate? Sure. But this loan also comes with a massive headaches. Okay. 1 year tax return. It's the one I alluded to. There's issues with, eligibility. So I'm making 2.5 points on it. Why not? Right. So, I mean, we can further go into some scenarios and discussions about this, how to price out rates, the scenarios you guys come across in another session. But just to, as we have about 5 minutes left at the 1 hour mark, deal talk. Want to end with deal talk. I love it. Anyone has a deal that they want to discuss right now, share with us that was unique. I just kind of shared you mine already. If nothing else, I am going to prepare to share that with you guys actually. But anyone have a file that they're working on that's been very unique? Christine, this is based on Instagram. It seems like you've been getting into escrow a couple times here and there. Congrats. Do you have any? Is there any uniqueness of these files that you can share with the group that might be beneficial to us or anyone else?
Not at the moment because they're pretty much like solid files, good credit score, like good income.
Awesome.
So, but when I do come across, I will, definitely like
Yeah.
discuss with you guys.
Thank you for at least that. Appreciate it. Anyone else?
I got a scenario, for as long as I've been in the business, this is pretty new to me. It's somebody owns a VA loan, owns a condo under VA, and you want to buy a bigger house and still use VA. I don't know what the exception is if someone's come across that.
How long ago did they purchase the house?
Oh, many years, 10 plus.
Yeah. So after, I don't know what the exact number is, but let's just say it's like 5 or 7 years, their entitlement gets pretty much cleared up again.
So they can have 2 outstanding VA loans?
Yes. I've had that before.
Okay.
Yeah.
Wow.
10
Great.
years is a long time.
Okay.
Yeah. There is a math to that. So that's a great question you can ask Rocket. Right? Yeah, that's a great question that you can ask Rocket. Actually, on that note, I'm going to quickly show you what came through because it's really fast, guys. So right, so here, so here's Rocket. They just responded. Okay, here's a response. It's not, I think my question wasn't specific enough, but they have a response, and then you can just hit more help, or rather continue.
Got it.
Yeah, I know I got to share the thing, but if you hit Pathfinder, it takes you through all the guidelines. So they summarize the Fannie Mae guidelines here for you. Okay, but if it's not good enough, then you can respond to this email or not. I thought you could. They gave me last time it was an actual underwriter CC'd on it. But anyways, yeah, they respond. They give you the actual guidelines, and then here it is. Yeah, so share this tab. So if you click on Get More Help, you can select, this, the middle one, and then provide, and then add to it. Got it, guys? So that's really neat. And you saw how fast it came through. It's just a matter of a few minutes. But my deal talk real quick, and I'm going to end it here. I know some of you guys already know about this, so pardon the redundancy here. Okay. Look at this tax return, guys. Am I sharing the right screen? No, I'm not. I want to show you this. This is really cool and neat. So here's my tax return. I'm just going to go all the way down. This is my self-employed borrower, okay, with a Schedule E income. Okay, so she drafted this email and said, "Hey, Ragnar, these are my numbers. These are my draft. Can I qualify for the refinance?" I ran it. I said no. Okay, you see on Schedule E, she's claiming $30,000 of income. That wasn't enough. Okay, plus $2,500 a month. It wasn't enough. So the borrower was willing, okay, to amend their taxes. Okay. They wanted to leave the business alone, okay, which they did. Just know that they did. But look at their rents received. 48. That's $4,000 a month. Okay. This was after a consultation. And they qualified. They filed it. Case we're done. The problem again was whether you could have two business incomes coming out of the same property. That was the issue. We went to Rocket. Well, I first, submitted through Giving Tree Scenario Desk. There was a bunch of no's. Okay, I didn't show you that, but you could take a look at it. And then ultimately, Rocket said they could do it, so we went with Rocket.
I have a question.
Yeah.
Yeah. So in this scenario where you amended their tax returns, and obviously, was it an amendment or did you look at a draft?
No, so that was a good thing. They didn't amend it. I do have an amendment file too. Maybe next week, if no one has a file or deal talk to share, I could share that one. But this one, they drafted it,
Okay.
and so they actually get paid more. That's the thing. Their rental is all under. It's an Asian family that's running a daycare, and they're renting it out to a bunch of people, and it's all under the table. So they didn't really react. They collect a lot more, but obviously they don't want to pay taxes.
They just checked with you to see if that would work before they even filed.
Say that one more time.
They basically checked prior to filing with you to see if that would work.
Yeah, and honestly, that's so this was a long time coming though.
Yeah.
A lot of my clients that I come across, I prep them for this if they're self-employed. He's like, hey, you want to purchase a home? If they're self-employed, if they're strictly W-2, obviously you can't do anything about it. But if they own rental properties or they are business owners, Schedule C, sole proprietor, or they're an S Corp, C Corp, whatever, LLC, doesn't matter. If you're self-employed, and I come across clients who are in that situation, I prep them for the following year.
So yeah, so that's good that you clarified that, because there's a big difference. I believe, I don't know how lenders will look at it, but if you amend the tax return showing more income, I'm sure that they're going to probably want to source that income if it went up.
Yes. And I do have one of that scenario. Again, I could share next week during Deal Talk. But yes, Freddie is correct, guys. So you can't just advise your borrowers. Let's just say you have a borrower, they submitted into underwriting and they got declined because there's not enough income. You can't just go and tell your clients, hey, I'll just advise amend it and then recall. The lender will call out for it. They'll call out for, why did this happen? Why did you amend it? Can this be justified? Okay. So great point, Freddie.
But Ragnar, just to close up, even if they haven't applied, will the lender know that this is an amended return we're applying with?
So yes and no. So that too, I had a scenario actually. And the response I got from it was actually through with Giving Tree. The response I got was, when did this get amended? And because the amended happened, like, I think it was like 7 months before they applied, they didn't care.
Got it.
Yeah. So in other words, if they amended a tax return a month or a day or a week before they applied for a loan, they're probably going to question it.
Yeah.
Cool, guy?
Yeah. And to close up, I'm sorry, I'm going off topic.
Okay.
Yeah. Every return that's amended comes with, an explanation within the 1040X And so we got to be very, very specific as to the reasons why we're amending. So we're telling the federal government why we're amending the return. Obviously,
Correct.
if the lender is requesting a copy of the federal return, they will see that 1040X and they will see what we told the government our reasons were for amending. But that's why I'm asking if these are scenarios where you actually do send the actual return to underwriting, or if it's transcripts, or because there's a big difference.
Yeah. So for me, again, most of my clients, I am consulting them on what kind of income it will be needed for them to qualify. That is up to them now to work with their CPA to see, hey, can we get this type of structure or these numbers, right? So rarely am I really working with amended tax returns, though.
I think in this particular case, Ragnar, you might have misspoke. Yeah, it was not. It was not an amendment. It was actually.
Yeah, it was.
It was
Yeah,
just.
it was a draft. Correct. It was a draft that was not filed. Does that clarify it?
Oh yeah, I'm clear. Thank you. I hope we have.
Oh, okay, great. Yeah, and I apologize if that was confusing. Cool. Any other questions? Good. All right. Well, you guys have a great week. We'll see you next.
Before you guys leave, sorry, I just was waiting to see if anyone had questions. But if anyone doesn't have any their login to Rocket, please send me a separate email and I will get you guys login so you guys can get to Rocket Connect. As well as UWM.
Yeah, thank you.
I'll send you an email.
So yeah, so send me a separate email if you guys don't have your logins for Rocket or UWM.
Awesome, guys. Thank you, guys.
Thanks, Ragnar.
Thank you.
Thanks.
Bye.
Thanks, Chief.
Bye.